They're saying that they come out with the GDP numbers and they say consumer spending is increasing. Yeah, it's increasing, but it's below the inflation rate. So it's really decreasing. So people are spending more to buy less. The inflation rates, yeah, things are coming down, prices are coming down, but prices are still very high. People still can't afford to buy a home. They can't afford to go to school. Can't afford to buy a car. What's the average price of a car? Almost $50,000. These moronic things with all this electronic crap in them that cost a fortune to fix when something breaks. Oh, you can't open the trunk. It needs to open by itself. Can't put a key in the door to turn it. No. So the costs of products are still very high. Now, let's go back to the real inflation rate. You go to John Williams' shadow stats, it's much higher than what the government is saying because they started rigging it in the 1980s. So they wouldn't have to pay people more in Social Security. Oh, the housing prices that went up 40% in 2 years? No, they didn't. We're looking in general at different levels and apartment dwellings and this and that. We're going to make up a phony number so we can bring down people stopped eating steak and now they're eating chopped meat. That's right. They changed their diet. So we're rigging the numbers to show that the numbers aren't really as high as they are. People are struggling. So now they're raising interest rates. Let's go back. And again, I'm not making this up. Go back. When did they start raising interest rates? Oh, in March of 2022? How come they didn't start raising them earlier? When inflation was skyrocketing and hitting 40-year highs. Oh, it's only temporary. It's only transitory. I'm Jerome Powell. I'm the head of the Fed. I'm Christine Lagarde, the head of the European Central Bank. You're full of crap, Celente. Inflation's not real. Then it becomes transitory. They didn't start raising rates in Europe until last July? And now they're ratcheting them up. Oh, Germany's in a recession. So is Europe. Oh, no, it's only a small recession. Oh, now you're going to keep raising interest rates. It takes about 15 to 18 months before the effects of the rising interest rates hit the economy. Now they're going to be raising them again. So the latest numbers came out. The job report is still strong. The jobs that are being created are low-paying jobs. They're laying off people that in middle-income jobs. We put it in the magazine every week. So now they're going to raise interest rates again. They're going to raise them probably another 50 basis points. Oh, did you see the number of new mortgage applications has gone way down as the mortgages now are hitting almost 7% again, 6.75%? So here's the story. It's summertime and the living is easy. People are in a summer state of mind. Vacation. Travel's going to be booming. Everything's fine. Then autumn sets in the northern hemisphere and people start feeling a shock of what's really going on. So considering the way they're raising interest rates, this is our forecast. By late September, October, you're going to start seeing the markets really going down. And again, why the market's going up? A couple of companies are driving it up. AI. People aren't investing in dividends. No dividends. No. We're going to invest in the AI because this thing is really skyrocketing. You're looking at the NASDAQ has gone up 32% in this year. 32%. Remember, the NASDAQ was going down because after the COVID war started winding down, people started going out and buying things rather than shopping online for everything and living online and Zooming online and going to school online. NASDAQ was going down. Now it's going up. It's only a handful of stocks driving it up. So when the winter starts setting in, autumn, winter, that's when we see the markets going down. And by the way, AI is real. This isn't a .com bust. Our magazine, the Trends Journal, this is when it was an eight-page quarterly newsletter when it began. This is 1999. It began in 1991. Here's your article. .com this. We forecast in October of 1999 that the .com bust would happen by the second quarter of 2000. It did. It happened in March of 2000. This is different. They were making up crap back then in the beginning of the internet revolution. This AI is real. So those stocks are going to keep going up, but a lot of them are going to go down and it's going to have a short run if they don't keep going and going and going. So it's not enough to keep boosting up the markets. You're going to see a banking crisis, the likes of which we've never seen before, not only in the US, but around the world. And here's the story. The COVID war that was launched by the Chinese on Chinese Lunar New Year 2020, the year of the rat, The damage it's done is incalculable. Economically, geopolitically, mentally, physically, spiritually. The numbers are all there. We write about it all the time. The suicide rates, the crime rates. And again, we forecast this is going to happen. Now the big one. The office building bust. Yes, you have in San Francisco, from the clowns, the geeks that launched the COVID war, saying that guy Dorsey he had Twitter at the time, supposed to go to Africa, wrote about it in the magazine as it's happening in February 2020. I'm not going to South Africa. Nope. And everybody go home. Don't come to work. Your office vacancy rate in San Francisco is 30%. You mean 30% of the office buildings are vacant? Yeah, that's right. Same thing in LA. Oh, over here in New York City, it's only 20%. Oh, up in Toronto, they're saying by next year it'll be 25%. One after another, you're looking at vacancy rates that are off the charts. Now let's go to the office occupancy rate, meaning how many people going back to work. According to Castle Systems with a K, it's 10 largest cities in America. It's about 50%. Okay, you talked about raising interest rates. These are floating loans. Now I got to pay more on my loan as I have a lot less tenants. Here, keep the building. We can't pay for it. There is, in the whole commercial real estate sector, it's over $20 trillion. And now that those debts are coming due. And a lot of that in the commercial real estate. The small and medium-sized banks have most of those loans. You're going to see a banking crisis, the likes of which we've never seen before. And again, the higher interest rates go, the worse it becomes. Oh, and let's not talk about the almost $32 trillion in government debt in the United States. Oh, you got to pay more on your debt as interest rates go up. We won't talk about that. Don't talk about that. And then you go to other countries where they're raising rates, like the UK, and people have to now, their mortgages are going up along with the interest rates because of the kind of deals that they have. Same thing in a lot of Canada. You're looking at over 2 million people that could be losing their houses in the UK in the next year. So, all this brought to you by the COVID war. And go back to 2019 before it happened. Germany was that far away from a recession. There were protests going on all over the world. Algeria, Lebanon, South Africa, Chile, the yellow vests in France. People taking to the streets, Colombia, Peru, all over. Taking to the streets, 2019, lack of basic living standards, government corruption, crime, and violence. Then the COVID war comes. Can't go out protesting anymore. Get back in your house. Oh, by the way, don't worry about it. Here's free money. Here. We'll print up tens of trillions of dollars and make up any crap we want. Bring the interest rates down to zero so we could prop up the markets when they should have been crashing. Oh, no, that's not what's causing inflation. You know what they're saying was causing inflation? I'm not making this up. The same clowns that said it wasn't here, it was only temporary and transitory. Higher wages. We gotta keep raising interest rates so we could slow down the economy so the plantation workers of Slavelandia could make less money so that all the bigs could get bigger. They're blaming it on higher wages, not what they caused by dumping in these countless trillions of dollars of worthless money, backed by nothing and printed on nothing. Japan hit its highest inflation rate in 7 decades. The sanctions that they put on Russia have, the quote from Biden, it was going to punish Putin. It didn't punish Putin, it punished the people. Again, then you look at the headlines going on and on from place after place. China, December manufacturing contracts at its sharpest pace in almost 3 years. Wall Street Journal, Chinese economic activity takes big hit. It's one after another. And again, they're making a very bad situation worse by ramping up the war. So let's go back to the reality. Let's go back to 2019, not ancient history. Happy New Year. At that time, Germany was a fraction of going into a recession. Let's go back to September of 2019. Hey, remember the repo markets where the Federal Reserve dumped in $10 trillion between September 2019 to January 2020 so they could keep pumping up the markets because they needed more cheap money? The businesses that they've destroyed in China and around the world are incalculable. Oh, you're talking about Italy? Now they're talking about Italy, and I think it was the IMF or one of them just came out, that they're facing the worst financial crisis of all of them concerning their debt level. And look at what's happened to the businesses. So now let's put it all together. We're looking at what happened and why it happened. So when they began the COVID war, they locked down everything. Stay at home. You can't go to work. But hey, here's some cheap money for you. Here, go on. Shut up. Here's some money. You got a business here. We're going to give you money. Oh, we're going to print, we're going to go to zero and negative interest rates. Well, they stayed on negative interest rates, what, in Europe? For how many years? Oh, only 8. In the United States, zero interest rate policy. The market should have crashed in 2020. No, we had a real estate boom. We had a high-tech boom. People were buying and fixing up. Here's more cheap money. Here's cheap money. But now, let's go back to the facts. We had the BS from Janet Yellen, oh, by the way, taken over by the Federal Reserve because she was the head of the Fed and now our Treasury Secretary, along with the guy playing the Fed head, Powell, going on for almost 2 years. Celente, you're full of baloney, and so are you other people. There is no inflation. It's only temporary. No. It's only transitory. They lied about it. They knew it was real. Same thing with Lagarde. So they could keep pumping in that cheap money. Now here's the big lie. Now they're saying inflation will get better because it was only caused by the supply chain disruptions, not our cheap money and our zero interest rate policy. You see where this is going? So here's the deal. If the Federal Reserve raises interest rates in February 1st, even 25 basis points, it's going to keep pushing the markets down. However, being that it's all about the bottom line, they may be less aggressive in raising interest rates, and that's why you're seeing gold prices going up. When all else fails, they take you to war. I talked about what Roosevelt did in 1941. What happened before that? There was a thing called the Great Depression. When all else fails, they take you to war. Go back to the dot-com bust. Again, in our Trends Journal magazine, October 1999, the headline, dot-com bust. Busted in March of 2000. Oh, you mean the day before 9/11, the NASDAQ was only down 66%? 9/11 happens, all forgotten. We'll create a new fake thing. We'll have a fake real estate market, a derivatives thing. We'll make up anything we can. So that's what we're saying. The United States isn't about the bottom line. The United States way out is with war. I mean, look, you can't make this stuff up. Look at the guy that plays the United States Secretary of Defense, Lloyd Austin. What was he? Oh, he was a general. No, after he became a general, you mean he sat on the board as directors of Raytheon, the second largest defense contractor in the United States? Oh, by the way, look at their stocks since this has gone up. Lockheed Martin, Raytheon, all the defense contractors. Boom, boom, boom. So that's where the United States is going. China and the BRICS are going in another direction. And then going back to gold. Look at all the gold that was bought up by the central banks in 2022. Let's go back. We had forecast in the Trends Journal, by the way, that if there was not a Santa Claus rally in 2022, it's going to go down deep in the first 3 months of 2023. However, you cannot forecast what they're going to do. It's a guessing game regarding the Feds, because let's go back to December 2018. Woo! The markets are going down really sharp. Donald Trump put extreme pressure on Jerome Powell to lower interest rates. Just before that, going back into November, Powell said they weren't going to raise interest rates. They did. He said Powell came back in early January giving the message that they were going to lower interest rates. So the power of the president is very strong. And again, the financial business, they're the ones that run the show, the BlackRocks and the Blackstones and all the private equity groups that are in charge. If they put pressure on the Fed to lower interest rates, they're going to do it. It's not about we the people. It's about the ones running the show. I thought the economy was going to crash in 2012. They invented a thing called quantitative easing. They didn't teach us that in Economics 101 at graduate school, nor did they teach us about zero and negative interest rate policy. They could come up with anything. They're going to make up anything they want. They're the money people are in charge. Anybody that thinks they have a government of we the people, they're still being taught in kindergarten to K-12 and graduate school. That's who's in control of the government. They're going to do anything they can to control our lives. Look what's going on with the interest rates, right? What's the inflation rate? Oh, it hit 10.7%. You're still deep in negative territory. So in the United States, what do you have? You have inflation rate, it's 7.1, and you have a 4.5, 5. You're still in negative territory. So here's what they're going to do. This is going to be the year we believe that we're going to start seeing going from dirty cash to digital trash. They're going to make up something new. And that's the way they're going to get out of this thing. Look at the United States. Just passed a $1.7 trillion budget when you have a $30.1 trillion deficit. They're going to make something up. Here, the Russians just hacked our banking system. You can't get your money out. But don't worry about it. We're coming up with a new currency. They'll make up anything. Oh, going back to, I said, when all else fails, they take you to war. The guy that was the president, FDR. Oh, that's the guy. You don't own gold anymore. Bring your gold into us, or else you go to jail. They'll make up anything. And I believe this is going to be the year where there's going to be a big push toward a digital currency. That's the way we see it happening. And it's going to go like that, like that, like that. And we're doing this to protect you so we can know every penny that you spent, where you spent it, what you spent it on, so we can get the tax money because we're politicians and we don't work a day in our lives and we need your money and all the little clowns that we call public servants that work for us, that do what we tell them to do, so we can keep them paid, so we get all your money. That's where this thing is going. And I say to people, if you're keeping money in the bank, why are you keeping it there? What they know is how they're going to rig it. And we don't know when they're going to do it and how they're going to do it. But again, as I was saying, why would you keep your money in a bank when they're not paying you anything and they're making money on your money? So going back to gold, and again, as you well know, everybody knows, we have no advertisers in the Trends Journal magazine. So we're not pumping anybody. To us, gold is the number one safe haven asset. When gold went down into the 1600s a few months ago, we said this is the bottom. It's going up from now. And now it's been hitting, several month highs. When they go digital, gold is going to go through the roof, because that's going to be the only real currency that's going to be accepted to pay to transfer, because they're going to do away with all the paper money. Again, the whole world has gone AI. It's a whole different world. It's a whole different world. And you know what? The biggest news now that's being watched is TikTok. That's where it's all going. And so what we're saying is to protect yourself.